All right. Welcome to the Ultra High Net Worth Clients Podcast. I'm your host, Chris Broadhead. We started this podcast as a way to create a central resource of the best portfolio manager practice growing tips shared by the most outstanding portfolio managers in the industry, of which our guest today is definitely one. These outstanding portfolio managers are going to be on the show and provide a ton of value for free, all in the hopes that our audience might learn from their words. My father was a financial advisor, and financial advisors are the main clients we serve. So my marketing agency's mission is to help every financial advisor grow their business in an effort to help the world become more financially secure. Today, we have the rare pleasure of talking with an incredible portfolio manager, Adrian Davies. Adrian, can you please introduce yourself and tell us a little bit about you?
Sure. Thank you for having me on your podcast. First of all,
Pleasure.
I am the president of Woodstock Corporation. I am also portfolio manager. I manage client accounts, as all the portfolio managers here do. We have 7 portfolio managers, and just really focused on the high net worth space. And we have 1 or 2 corporate clients as well, some charities outside of that. But we really focus on serving all those very well and getting to know our clients personally. We have long-term relationships with most of our clients. Our investment philosophy is buy and hold. We have a strong bias towards equity ownership. We do, for some clients, for some accounts, investment grade bonds are an acceptable asset class, but we keep things very simple. There's enough to worry about in the stock market, and you can get exposure to a lot of things. You can get to a lot of trouble with stocks, but it's good trouble. They tend to go up and do very nicely over time. So our clients are very happy with our results there. That's the elevator speech.
So it's a good one. Great. There's definitely a lot to dig in there. I like to start at the beginning. How did you find yourself in this wild and wonderful industry?
Right. Well, going way back, my mother was an equity analyst for the University of California, their pension system there. So I guess I got my introduction to stocks and the stock market through her, and followed in her footsteps. Wanted to be an equity analyst. My dad was in finance too, but not so directly involved in stocks. So yes, I mean, I just went out and tried to get a career in finance, and actually started in Hong Kong, of all places. This goes back to 1993, when the Hang Seng Index, I believe, pretty much doubled in that year, and all the American investment banks were doubling their staff, so it was a good time to get hired. And I missed that initial wave, but it compelled me enough, or was interested enough, that I hopped on a plane and got out there, because I did realize at some point that sending resumes over to Hong Kong — I was living in California at the time — was not working. So I lived in a youth hostel and just started networking, and there were a ton of young kids that had just gotten jobs, and they were happy to network with me. And it was the situation where you kind of do a rundown, ask people how they got to where they were, who they know, and what advice they have. Just kept turning over stones until I found a brokerage house that was looking to hire someone. They were looking to hire someone to edit their research reports, because the research reports were written in English. And they said, "Yeah, don't worry about the equity research part of it. We'll train you to be an analyst." This was before business school. I did that for 3 years. Then I went to business school, Darden, at the University of Virginia. Thank you. Then I got a job at a mutual fund company, Federated Investors, out of Pittsburgh. So I worked there for a couple of years. And then I branched out from there, decided I wanted to move to the Massachusetts area, and started networking, found a job working for Woodstock.
Wow, you are our first guest who ever cut their teeth in the Asian markets. That's really exciting. What did you learn over there, and how was it different than working stateside?
Yeah, Hong Kong definitely had a different culture, different ethos back then. It was kind of, they didn't care where you came from, what your background was, as long as you could kind of fit the role, do the job. You were hired, and that determined how far you could go. Very much a meritocracy, uh, and people were changing jobs like every 6 months. I mean, it was that dynamic an economy at the time. So I did stay at the same job for 3 years. Um, was very happy with my employer there. It was a Chinese brokerage house called Xinyan Wanguo. Um, at the time, things have uh, developed since then, so I have no idea what they're called today. Um, but just, I mean, that was my whole introduction to kind of stocks. And I mean, there's a decent amount of regulation, and things are fairly reliable there. It wasn't like too falling off the edge of the earth, remote, or uh, um, uh, it was fairly developed, I guess, as a stock market back then, even. But just learned how companies work and how you know, how investment banks work, I guess, is important too. Understanding their role in the process, and what they're looking for in a research analyst, and then deciding. I made my decision that I wanted to be on the buy side of the equation.
Mm-hmm. Awesome. So, how did you find Woodstock and decide that they were your next move?
Just again, networking. I was in Boston. Um, well, I did have a brief stint at a, a Mellon Bank company, which opened its doors, I believe, in September of 2001. Didn't stay open very long. It closed its doors in 2003, in about March. And I worked there for about 9 months, so that got me to Boston. But then once you're here, there are lots of financial professionals, and again, it was just a question of meeting people and knocking on doors and looking around and stuff. And I was very fortunate to find Woodstock. And I had done some portfolio management work at Federated Investors. But it was certainly, I was looking forward to the role of having being more of a full-time portfolio manager here.
Mm-hmm. Awesome. Um, that's great. And okay, so you come to Woodstock. How did you start getting traction? How did you grow your practice? Tell me about growth.
Yes, I understand. I appreciate that your listeners want to learn about growth. Um, so Woodstock has a founding family. It has a long history. It's I believe it's 94, 95 years old now as a company. Um,
Mm-hmm.
so uh, that provides a great kind of anchor in terms of having a strong asset base that's here to stay. Gives it a lot of stability. So that was something that I came into, got hired into. And in terms of growth at Woodstock, we uh, uh, almost regret keeping such a low profile. I think we do. We certainly we grow mainly by word of mouth. Just we focus on providing great service to our clients and hope that they will refer us to their friends and other family members. That's how we get most of our business. And they've been great. And so there's not a sort of strange twist to the story or anything out of the ordinary from that standpoint, I am afraid.
Okay, great. So, when you came from, it looks like it was called Shenyang. I'm sorry, I don't need to name them. But
Yeah.
when you came from your, firm, uh, in Hong Kong, and then moved over to Woodstock, did you bring clients with you? Were there Woodstock clients you worked with? How did you kind of get your initial book going?
Right. Yeah, I know. I really wish I had a story for you there. They hired me as an equity analyst because that's I was very at Fitter Investors after business school. Very briefly, I was a portfolio manager. That was kind of in the 2000 era, but that would have been of their utilities mutual fund, in fact. And so that did not translate at all into the high net worth world. When I can, and then not much in the way of direct clients. I was an equity analyst at the Mellon subsidiary as well. So I came here without, I came to Woodstock without any clients. And they were fine with that since they had assets to manage. For me, there had been some management change here over the prior year. So they were kind of rebuilding the team a little bit, I guess I should say. And that was the opportunity that I found. But I have been able to grow the business again just by listening to clients and responding and treating them well and managing their portfolio as well.
That's awesome. Do you ask directly for referrals? Is it just a product of delivering an outstanding service? For any listeners who are always trying to add more referrals, any advice around that topic?
It is certainly a balance because you don't want to be too pushy. I mean, it's certainly, you need to let them know somewhere in the relationship that, this is how, we're very grateful for client referrals, and say, is there anyone that Woodstock could be a service to, that Woodstock could really help out in your life? I think is a good way to phrase it. I mean, I guess that's about it.
Okay, cool.
I'll say we in our newsletter, there is a catch line at the bottom of the introductory letter, every letter, that just says, your friends and family are the referrals are the best way we can grow. Please keep that in mind. If you can refer us to someone, that's greatly appreciated, and we appreciate your business too. So they, to the extent that clients read our newsletter, they also get the reminder there.
Got it. Awesome. And you said you guys focus on the high net worth space. I find there are quite a number of definitions for that acronym. Do you have a specific number for the high net worth space?
I will say our minimum client relationship size is $1 million, and that could be a couple of accounts, but it has to be sort of the same household, same family. Most of our accounts are in the $1 to $3 million range. We do have some that are substantially higher than that. But probably the law of distribution would tell you that we're going to get a lot more in the $1 to $3 million range.
Got it. Awesome. And that's a very attractive space for advisors to work in. Do you find that your high net worth clients, do you find they're concerned with any specific topics or issues, or what kind of questions are they asking? How do you keep them happy, comfortable?
Fair enough. There's a range of personalities, as one might imagine. We do have a few clients that are very nervous about the market and call us on a fairly frequent basis, but most clients are kind of long-term clients, and they kind of understand that the market will go up and down. And that's just kind of the way of the world, and that they're going to buy and they're going to hold their stocks through thick and thin, which is, we might make some modest changes around the edges, but we're not too drastically. You're going to be owning your stocks for a long time, in a variety of conditions. So Trump's tariffs or whatever is going on with the tax rate or something, that doesn't really change our investment philosophy of the longer term. So the key is just really keeping them in the loop, just touching base, making sure you understand what's going on in their lives, what their needs are, listening, and then communicating what you're doing in the portfolios, which is a light touch. Our portfolio turnover is probably less than 10%. We don't want to. We're tax conscious. Some clients are more tax sensitive than we'd like them to be, but because we do like to make changes to portfolios here and there. But it's really about looking at their total after tax return, and that probably means not trading too much.
Mm-hmm. Okay, got it. And does your office work together, or are you solely in charge of your clients? What does the setup look like for you guys?
We're a team. We're small enough that we work pretty closely together. We are in the office 5 days a week, which is maybe unusual in these times. We have our weekly research meetings and some investment policy meetings and other meetings as well. Every portfolio manager is an analyst, so we meet to talk about the companies we're investing in. We certainly help each other when you have a client and has a particular situation. It might just be needing an accountant or a lawyer or something more complex than that, I suppose. But Woodstock has a certain framework and certain constraints. We have a monitor list, we call it, about 90 stocks that we actively follow as research analysts. And so the portfolio managers are allowed to choose from those stocks, but not go beyond those unless there's a specific client request to invest in something else. But that really that's our discipline in terms of we have to know the companies we're investing in, where their businesses are in their cycles, and not get diluted into thinking there's something they're not, or not understanding the business very well. So I suppose that's how we stay disciplined with our companies. But each portfolio manager really has the freedom to do whatever is right for each account. And, at different times, it's going to be different things. Investing, you might like a stock and been buying it for many of your accounts, but since we trade in separately managed accounts and we go into every account one by one to make trades, if a stock is suddenly up 30% or something, maybe you don't buy it for the next set of accounts because the timing isn't quite right. But by and large, our performance across client portfolios and across portfolio managers comes in pretty close to each other, where we look at all of our accounts and there's this 3 standard deviation difference between the accounts on a typical year. And of course, it's going to change which accounts are advantaged year to year, but we think that's pretty close. So we think we do a pretty good job of servicing all the clients very well.
Mm-hmm. Awesome. And to the extent that you're comfortable sharing, how many clients do you work with?
3 percentage point standard deviation. Maybe I didn't phrase that quite correctly. One standard deviation is 3 percentage points. So, and then your follow-up question was,
how many, to the extent that you're comfortable sharing, how many clients are you currently serving?
Yeah, it's about 30 relationships, somewhere in there. I don't have the exact number, but that's about it, which is plenty. That keeps me busy I wear other hats too, but all of that keeps me very busy.
Yeah. And especially if, a couple of them are calling you frequently.
Yes.
That's great. So when you joined the firm, did you have any of those, or were all of those kind of created, or were all those clients found after you joined, or how did you get to 30?
Let's see. Woodstock hired me because a portfolio manager was leaving, so they had a set of accounts they asked me to take over, and that process is always a little challenging in its own right. Some clients didn't take well to that, didn't gel with who I was or the situation that they found themselves in, whatever it was. So yeah, some clients did leave, and that's going to happen. Hopefully have an open dialogue with them. And I mean, certainly one option is, well, there are other portfolio managers here. If you wanted to try another Woodstock portfolio manager, that's certainly an option. But so I have a set of accounts, and many of those accounts are still with me today. And then and whether it's been referrals from them or other referrals from friends and family, either my own friends and family or the founding family of Woodstock, or the clients. People have come in from different ways.
Mm-hmm. Awesome. And that is that is a unique situation and can be challenging. Were there any specific ways you kind of tried to make the clients, feel comfortable with you, be like, hey, I'm awesome. You'll enjoy working with me.
Yeah, no, it was a little bit of a new experience for me, and that was 23 years ago now. The I think they have a lot of trust in Woodstock. Just they'd had enough experience. They liked the Woodstock product. I mean, yeah, some there were, it's a small number of clients that said, I'm not happy, I want to leave. But I think most of them are willing to give me the benefit of the doubt, and certainly there's the inertia of just staying for a lot of clients. And I was able to get to know them and operate with their style and figure out what their expectations were for me communicating with them and how to get along and what's going on in their life. And most people are, very happy to open up and tell you what's going on in their lives. And that's a great way to build a relationship. So yeah, for most of the clients, it worked just fine.
Mm-hmm. Awesome. And then, so then you grew your practice from referrals from this kind of like core clients.
I mean, I will say yes. I mean, I will say it's also knowing the companies, understanding their portfolios, and convincing them that you are paying attention to, what's going on in the various stocks, and being able to being an authority, and having opinions on that as well. I was able to grow the business. Of course, over the last 20 years, the stock market has been a tremendous tailwind to grow assets. So that is probably the largest factor in growing my asset base, if I'm totally honest. But sure, I mean, lots of things happen in people's lives, and I mean, marketing is, as you, I'm sure understand, is that most people have no interest in talking to an investment professional, a financial advisor, and then something changes in their life, and suddenly they do. And you have to be there or be top of mind for someone, and hopefully we're top of mind for our clients, and so we're more likely to be kind of in the right place at the right time if we're on the top of our client's mind. But so it's there's a lot of luck, but just contact with the clients is the other thing.
Mm-hmm. Yeah, absolutely. So, you mentioned you focus primarily on 90 stocks. Did I understand that correctly? Yeah.
Yeah.
So how did you choose them, and how do you stay, up to date on them?
So yeah, I mean, that number can change. We add a couple of stocks every year, and we take a couple out. I mean, because we're long-term investors, they really have to be quality stocks. I appreciate that you don't want to overpay for something, and that's also dangerous. But we're really looking at companies that are going to grow over time, not the latest, what's growing this year kind of a thing. But it has to be a steady record of compounding earnings, over time. Quality, long-term growth. They they tend to fall into the large cap category, just because those guys have had the records. Although, it's not uncommon that we'll have a smaller mid cap stock that gets acquired. So suddenly we find ourselves with a ownership in a larger cap company, simply because our original holding had been acquired. But we tend to stick with those too. We'll stay invested in those if the prospects are good enough. Um, uh, but hopefully someone who's very stable, dominant position in their industry, or growing as some distinct competitive advantage that's going to keep them there. And that's going to show up in the financial metrics in terms of a strong operating margin, strong balance sheet, and then just kind of understanding what the management where the management wants to take the company and so forth. But it's the usual type of equity research stuff. We do get some Wall Street research, not a lot, but some. We're grateful for that. But in our various resources, software, Bloomberg and FactSet, things like that, to follow the companies. We do follow quarterly earnings, listen to quarterly conference calls, read the 10Ks and Qs, things like that, just to understand the daily news flow of companies to the extent that we can stay on top of it. We do.
Okay. Awesome. Cool. Well, we are coming towards the end of our time together. So I have one final question for you. It's an open-ended question. You can take it in any direction that you like. And that question is, what are you working towards? I love your reaction, by the way.
I am happy here. I actually no. So I'm in a management role now, and I actually enjoy doing the portfolio management more. Arguably the compensation isn't quite as good, but the following the stocks and working with clients, those are the fun parts of the job. I would say, don't rush to be in management, because then you get all the problems. That's where you have to learn to deal with all the headaches. So I suppose that is one thing. Another kind of, there's a little off topic too, but another thing that makes Woodstock a very interesting, unique place is that its owners are its biggest customers, right? So they have the interest of, they know what the client experience is, and that's what they're focused on. So that's what makes Woodstock really focused on serving clients, our existing clients, very well too. So they're responsible for the structure, why it is the way it is, and it's worked for 95 years, or it's been developed over 95 years, I'll say. But
wow, yeah, that's some history right there. Awesome. Where can my audience find out more about you and Woodstock and everything y'all are working on?
Great. We have a website, www.woodstockcorp.com. You can sign up for our newsletter there. It's called Evergreen. That comes out about once a month. And we're also, you can get that, Woodstock has a listing on LinkedIn as well. We post links. We post the same content there.
Awesome. We'll be sure to link all that in the show notes. Adrian, thank you so much for taking the time, man, during this busy, crazy time of year. All kinds of wild stuff's going on. Appreciate you sharing your time. You're obviously a very passionate person who loves to serve his clients, and you're extremely passionate about putting them in the best place to succeed, and just making sure that they are served extremely well. So really appreciate you spending time with us and sharing your decades of experience and all that passion. So
great. Well, Chris, thank you for having me. Enjoy your podcast, and hearing different perspectives from different investment managers and financial advisors. So that's fun too. So thank you.
Yeah. All right. And to all our listeners out there, thank you so much for tuning in, and keep on growing out there, everybody. See ya.